Welcome to another video. Today, what we will be doing is speaking about exhaustion patterns in the market. Specifically, we will investigate how banks actually take their profits during those exhaustion patterns and how they most of the times precede the development of a new trend. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms every day. So I suggest you subscribe to the channel so you don't miss out on all this free education, and I will see you in the video. Okay, so this will definitely be a very interesting video. What I will be showing you is exactly how hedge funds take their profits. Specifically, what we will be speaking about is EURUSD, because at the moment, during this move here, there is clear proof that hedge funds have been closing their long positions. And this type of patterns are exactly what hedge funds do over and over again in order to take their profits when they want to close with the maximum profit. Because obviously, if you are in a long position, you want to be taking your profits at the high, while if you are in a short position, you want to be taking your profits at the low. So this is exactly what we will be speaking about. Then I will also show you a full breakdown of the situation that currently we have on EURUSD, basically detached from what we have from a profit-taking perspective. And I will show you exactly where is the next opportunity that we can be looking for on EURUSD to obviously be capitalizing on the next move that this pair is supposed to make. So this will be a very, very educational and practical video, and I suggest you watch it until the end. Now, let's start by speaking about profit taking. Now, what we see here clearly, if we look at the market from a monthly perspective, is that we had a huge bullish move. Both on the weekly and on the monthly, obviously, we can see that there has been a huge move to the upside. Now, if you're asking yourself, why has the market created all this move to the upside? There is one single simple answer. The smart money has been longing EURUSD very aggressively. In fact, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, we can see by checking their orders that they have been aggressively longing EURUSD. In fact, we went from having minus 114k net positions with 271k shorts and 157k longs to having all the way up to 266k longs and 66k shorts with 199k net positions. So we went from having way more shorts than longs from an institutional perspective on EURUSD to having way more longs than shorts. So completely the opposite scenario. So clearly the smart money was buying EURUSD. Now, if you're asking yourself, hey Nick, you're only checking the euro. Why are you saying that they have been longing EURUSD if you're only checking the euro? I'm saying this because all currencies on the spot are traded against the USD. So if you check the data for the euro, you are already checking EURUSD. So clearly hedge funds have been aggressively buying the euro. And in fact, we see this clearly reflected in the price action with this huge uptrend that has been developing. Now let's actually take our data here so that I can relate it directly to the chart. These are both custom maps that we have. You can find them directly on the student dashboard. Now, what kind of situation do we currently have? We have seen that hedge funds have been aggressively increasing their longs and decreasing their shorts, and the market has been aggressively making the move to the upside. And that is exactly what we wanted to see. In fact, if we remember from our previous analysis, what did we say? Now, when the market was around this area here, I made a couple of breakdowns. One explaining all the reasons for which from here we wanted to see this retracement lower, and then I made another breakdown explaining all the reasons for which from here we wanted to see this move to the upside develop. And I will link in description both this previous analysis in which I explained before this move happened why I wanted to see both these moves. You find them both linked in description. You can go and check them out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. And why have I been speaking about why the market make the move to the upside? Because that is how you will understand how hedge funds actually take profits. So now what do we know? Now we know that hedge funds have been aggressively longing EURUSD, and we know that when the market reached this zone here, this high here, they had a massive amount of longs, 266k long positions, one of the highest values that we ever had. So if they have a maximum amount of longs, at some point they have to take their profits on all these longs. Now, how do they take their profits on all these longs? Now, there is one very simple way in which they can do it, okay, which you will now understand very well. Now, keep this in mind, okay? We are here. We have a massive amount of longs, 266k longs. And let's put it from a perspective of a big bank hedge funds that has all these longs. They want to exit their position, okay? But they cannot just click the button as we do and exit the position, because there is not enough liquidity in the market in order for them to actually do this. They cannot just click the button and close their positions. They have to generate the liquidity, because for every buyer in the market, there has to be a seller. For every seller, there has to be a buyer. So what do? If they want to close their longs, it means that actually you're shorting. So you need somebody that actually buys. So what do they do? They continuously take out the highs. Many breakout traders will enter, and they can use their liquidity to actually close out their longs. As you can see here, what did the market do? The market created a higher high. Many people started buying. Perfect. They can close their longs. Then again, there is a high here. Again, what did the market did? Boom, higher high. They can close their longs. Plus, many people that are shorting will have their stop losses above this high. So that also is better because they also hunt those stop losses. Then again, what do? Again, they create a higher high in order to take out all the stop losses and create more buyers so that they can close their longs. And then what market continues to do? The market continues to move inside of this range, creating a lot of manipulations. Now, this is exactly what they need. They need that zone in which they can create a lot of manipulations by keeping the price high. So that until they close their longs inside of this area, they have closed their longs with very good profits. Because what is more profitable? Is it more profitable to close a long at a high? Or is it more profitable to close a long after a retracement? Obviously, at the high. So that is why they want to take their profits inside of this area here. And in fact, that is exactly what they have been doing, because we can clearly see that reflected in their orders. We can see that first they closed 11k long position, massive amount of longs getting closed. Then again, they closed another 2.1k longs. And now again, with the last report, we can see that they closed 17.9k long positions. So again, a massive amount of longs getting closed. So that is the reason for which the market creates this kind of ranging zones at a top. If you see institutions during a ranging zone adding more longs, it means that it's just a consolidation area before a continuation higher. But if you see them close longs, it means that what they're doing is that they're taking their profits, okay? Which is exactly what we see at the moment. And how we will be approaching this kind of situation with students. Now, this is how we will be approaching the situation. In order to show you this, let's first give a full breakdown on EURUSD as quickly as possible. Now, from a monthly perspective, we can see that we have a market that has provided this overextended W formation, from which we definitely expect a retracement. In fact, after an overextended W formation, you definitely want to see the market give you a retracement. So on the monthly, we expect a retracement. If we want to measure this retracement, we have to take a Fibonacci from the low to the high of the impulse. And what we can see is that we have a first downside target at the 0.382 of the Fibonacci taken on the monthly impulse. We go down on the weekly, and what do we see? On the weekly, we can see that the market is quite overextended as well. And we would like to see the market give us a deeper retracement. Specifically, we can see that from a weekly perspective, the market has kind of created this weird regular head and shoulders from which we can expect a move to the downside. We go down on the daily, and the situation on the daily is extremely clear. Why? Because first of all, we know that hedge funds are taking their profits. So we do expect a move to the downside, even though we still don't see proper shorting yet. But what we also know is that if the market will break below the structure, all the structure will be turned resistance. Now the last daily close is still respecting this area. So today the market can still easily close above the area and respect it as support. However, if the market will confirm a break below this area, then we will have a couple of very good opportunities. In fact, if the market breaks below the zone, first of all, we will have an overextended information that we can look for a trading opportunity using this pattern, because after an overextended information, we want to see the market give us a move to the upside. So what we will be doing with students after the creation of this overextended information, we will be monitoring price action from a 4-hour perspective, because always remember, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So after this overextended information, we will be monitoring price action with students from a 4-hour perspective inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and for the market to go and retest all this support, which at this point is turned resistance inside of this area. And after the break on the retest again, that is, we will have another opportunity for the market to actually reach our downside target. So first, we will be looking for a potential long after proper confirmations from a 4-hour perspective. And then again, also here, we will be waiting for proper confirmations from a 4-hour perspective. And as soon as the market will provide them to us, with students, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse correction and impulse pattern to the downside. However, it's very important to say that if the market will not break below this level and today as well create a break back above this structure, obviously the full setup is invalidated, and it means that hedge funds need to close more longs because we still don't know if the profit taking is completed. The profit taking could still be not completed, and they need to make price range a little bit more inside of this area. That is why trading is reactive and it's not predictive. We have to wait for all our conditions to be satisfied in order to be looking for an opportunity, and that gives you the possibility to have high risk to reward trades with very good probabilities, which is exactly what we are always scanning for in the market with students. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.